first thing that I know we're all concerned about is how's our cash position in the town. So at the end of September 30th, we actually had general ledger cash of 17.4 million. Now you can see most of that cash is in our checking account right there, General Carter. And then the other part of our cash, or the majority of it, is in the Truist Public Fund Savings Account. So our general checking account has a balance of around 4.4 million, and our savings account has a balance of around 9.6 million. And then we have various other accounts that are throughout the town for different purposes. And one of the things that we do is we review the interest rates that we're receiving on that, and then we do call all the different banks in town and put it out to bid, basically, to get quotes on it. So right now, we're earning a 3% yield, so we're gonna try to get that back out. It is a little bit harder for the town to get as high of an interest rate because I don't know how many people know this. Banks have to have insurance on public funds. So instead of like the FDIC insurance, normally they have to buy like public funds insurance. And so sometimes it's a little bit harder to get a higher interest rate because of that. They have to fully insure our funds. Or in this case, Truist is able to give us that 3% because they take our funds and they put it into several different accounts and get the FDIC coverage.
Okay.
Yep, so just curiosity factor. I didn't know if you all knew that. I think it's kind
No,
of
I
interesting.
Okay.
And then the next important item is, all right, we know we have $17.4 million in cash, but how is that cash allocated across to the different funds of the town? So the highest fund is obviously the electric fund at 8.5 million of that cash balance. The general fund is the next highest, it's at 3.7 million. And then you can see some of our other funds off to the side. There's a general capital projects fund that has roughly 2 million associated. And then we have an electric capital projects fund that has 1.3 million.
Are those two already encumbered?
Some of them are, but some of it is just by project specific. So, I mean, all of those I would say are committed to the projects within there.
Not encumbered, but committed.
Yeah. And then another helpful chart is how is our cash balance in comparison to how much we spend each year. So the main thing we want to check with this chart is just to make sure that we have reasonable amount of cash. We don't want to see, well, I mean, I guess maybe it would be great for interest earnings, but we don't necessarily want to see a $25 million cash balance in the electric fund that matches $25 million we spend a year. So what we can see is that our cash balance is reasonable in comparison to what we're spending each year. And then this is something that I like to do, but I don't think I've ever presented it to council before. This is called a year-over-year comparison. So what we're doing is we're comparing quarter one of fiscal year 26 to quarter one of fiscal year 25. So in the light blue is fiscal year 25, that first quarter, and then in the orange is fiscal year 26, that first quarter. So we can see the different funds in comparison. General fund cash is down, you can see, and then electric fund cash is down. But on the reverse side, general capital projects cash is up, and electric capital projects cash is up. And then I just wanted to include some commentary here about some trends that I'm seeing. So the cash balance is definitely down in the general fund and electric fund operating funds. A portion of the decrease in the general fund, though, is because of the American Rescue Plan Act funding. So we had a good amount of cash last year still being spent by the Bedford Regional Water Authority. And as of the first quarter, there was only around $500,000 left to be spent. Also, there's a large increase in cash for the general fund and electric fund capital funds. And kind of like Councilmember Foreman mentioned, these are committed funds, however. So we do have projects associated with those. And in total, the cash position is down around 1.6 million from quarter one of fiscal year 25 to quarter one of fiscal year 26. However, ARPA funds decreased 3.4 million. So if you account for that, we're actually up in operating cash in comparison.
Was some of that from where we were helping the electric fund also? Where we were basically supplementing the costs?
Yes, and that
Or,
Kind of
cause that's where the
good.
electric was down a little bit.
Yeah, we'll review that a little bit more
Okay,
later.
so I'm ahead of you, sorry.
But yes, you're right. Cash is down. Just a quick spoiler alert: $167,000 in the electric fund year over year. So not terribly, but it is still down. In this chart here, I wanted to look at the revenues versus expenses so far for Q1 of fiscal year '26. One thing to note: this is not unusual for most towns, especially. We have a lot of money going out at the beginning of the fiscal year, and we don't have a whole lot coming in until we have taxes that are due December 5th. So you can see the gap there between our expenses and our revenues is around $1 million, and that's really the reason that we need cash reserves. So we need cash in our account in order to keep us moving and be able to spend money during the periods that we're not collecting a lot of money. So this is a good chart that highlights the need for that. And I've kind of briefly mentioned it, but the general fund, you can see here, we have a bunch of different governmental funds, but that's our primary function. The other ones really don't even blip on the graph. So most of what we do in our governmental funds is the general fund. All right.
So you're saying, Ann, that once the real estate taxes come in, then that will pick back up and make up the
Yes.
difference? And I think you're asking for, we'll probably get the question answered on the next page. I know some are talking about doing away with car tax.
Well, and we don't see the full impact of that yet. So in Q1, primarily what we're seeing are supplementals. So this is where you bought a new vehicle or you put a new construction in place. And that is one thing I wanted to note. So if you look at Q1 last year in comparison to Q1 this year, you'll see that the revenues are down for real estate and personal property. And that's primarily due to our supplementals. So we have less transfers that happened in the first quarter of this year versus last year. Now, when you see the primary assessment that hits in Q2, you're gonna see that that's higher. So personal property, I can already spoil that for you, is up for Q2 in comparison to last year. But at this point in time, it is down. So it's just interesting to note that economic activity right now is maybe a little bit less than it was last year. And then other local taxes, this is kind of small and hard to read. Sales tax is down primarily because of the delay, so we're just waiting for that payment to come in from Bedford County. Cigarette tax is down, and we actually discussed revenue projections in our staff budget committee meeting today, and it's fascinating if you look at this over a 10-year period, you just see it continuously going down. There's various reasons for that, one of them being that vapor products do not have the cigarette tax. And so we've seen an increase of vapor products throughout the last several years. Hopefully, people aren't smoking as much, but it's more likely the vapor products not being taxed. In the reverse, meals tax is actually up quarter over quarter. So this is interesting to see, probably because of prices. I think we all felt that as we've gone to our restaurants and paid our meals, we've seen those go up. And so as the meal price goes up, our tax revenue goes up. So I think we're seeing that.
So I have a question on the depot tax.
Mm-hmm.
I know we talked about not doing all that last year. Are we looking into the next year's budget to maybe raise that to a number?
That takes effect basically in January is when we'll start seeing it.
Okay.
Yeah, the payment's not due until March, so we're not gonna see the full impact of that 200.
We'll start hearing about it in January too, by the way.
Yeah, yeah.
We'll see it in the Q3 financial report because it's due by March. So by the time we do that March 31st financial, you will see all the payments.
Okay.
And then the other thing I wanted to note is that interest is down, like interest on investments. One of the reasons for that is that we have the American Rescue Plan Act funding, and the federal government allowed us to keep the interest associated with that. So we have enjoyed that for several years, but now that it's pretty much spent, our interest earnings are down. There's pluses and minuses there.
So I have a quick question. When I was looking, this only has contractor B-pool. Does that cover all the B-pool taxes?
Well, so retail sales next to it, so it
It's
doesn't
also
say
B,
B-pool.
okay, it's all B,
It's
so they're all
B-pool.
B-pool, just was that one was labeled.
Correct. Yes.
Okay,
So the next 1, 2, 3, all of those 4 right there.
okay, yeah.
And then next is state tax revenue. So this is what we get directly from the Commonwealth. Rolling stock tax is a once-a-year payment, and so that is in, and it's pretty much in line with last year. Mobile home titling tax, that's kind of small, but it's in line with last year, you just can't see it. And then Commonwealth personal property tax, this is the PPTRA that you've probably heard about, that relief that we get from the state that we allocate to our citizens. So that is frozen, and it's at $280,000 a year. We also receive an auto rental tax, and unfortunately, because it's so small in comparison to the PPTRA, you can't see it, but it is increasing. Partly because we're doing a leased program, so we're kind of paying into our own taxes by doing that. And then the last one is communication taxes. This is down year over year, and if you look at that 10-year trend, it's continuously going down. This is money that we get from the state for things like telephone lines, cable TV. One of the things it does not charge is cable internet. So I know as many of you have seen, we've seen people dropping internet at their homes, dropping landlines. So this tax revenue is going to continue to go down as that becomes more prevalent.
We don't get any tax from like the cellular services or?
Not for that. And I know like the internet, for example, there's that federal internet tax.
Yeah, I knew there were some taxes on them, but I didn't know if there was able to, is there a way to possibly tax that from the local government?
I don't think so, but I can check on it. I can see. But that's Commonwealth. So this is what we get from the state. And most of it's pretty in line with last year. Switched colors on you, so now we're switching over to expenses. And so year over year expenses, you can see last year in orange and then this year in that yellow gold. So most of our expenses are up. Most is due to timing, like town council, I think the fireworks payment was paid earlier this year than it was last year, so that was a part of the July 4th event. And then town manager slightly up. Independent auditor is much higher. That's due to timing of the engagement. But we're also feeling the hit of inflation for sure in every department. And as you can see in the next one, same story. Most of our department spending is up. IT is especially up because we've had to add professional services there to meet all of the current standards for IT requirements. And public safety is not immune. They are also up year over year. So my commentary is almost every department, you're seeing the hit of inflation now when you're looking at spending this time to last year. In community development, there is a decrease year over year, but that's because we had grant fundings last year. So if you excluded those grant fundings, it would be more in line. You wouldn't see that drop. Economic development is slightly up. Transportation and safety is a grant that we received for the Otter Bus. And then community support right now is just a $9,000 payment to the Bauer Center for the art grant.
Will that transportation and safety continue into next year, or do we know yet?
Yes, it will. So we have a phase 3-4 grant that Mary is working on, but I think it's in a different department code. We've moved it into Fund 50.
Okay.
The reason we've done that is you see how in community development, these grants inflate the operating budget. So when you're looking for trends, it's really hard to see how they were doing year over year when you have these grants inflating that budget. So we're trying to move more and more of those grants into the capital fund so that we get a true picture on the operating budget.
Are you doing that with the police department and all the other grants, the smaller grants we get?
Everything but the DMV grants, because the
'Cause they gotta go to
payroll
personnel.
component
Okay.
is really tricky, but yes. I'm trying to get it through. There we go. And Public Works. VDOT is down, but I think this is primarily timing. We anticipate this one to be higher year over year because we got more funding from the state this year. And then general properties is up, no surprise there. This one hurts. Municipal building maintenance is way up. We all know that that's because of the HVAC issues we're having. Maintenance of motor vehicles is up. And the only thing that's really down this time is general administration. And then if you look at the non-departmental funds on the last page, you can see that the American Rescue Plan Act, we had a lot more spending last year. We haven't had any spending yet. I will say we had a reimbursement from them for all but $100,000 roughly remaining, and that's in October. So we'll see that in the next quarter. And then our debt service is slightly less than last year. And then our transfers is slightly less than last year. So overall, how's the picture of the general fund? Our use of fund balance for quarter one is down to $962,000, or roughly $1 million. And last year, we were actually using $1.3 million. Part of that is because we had grants that was using that cash allocation. Property taxes in quarter one are from supplementals, like I mentioned. So we are seeing decreased activity in fiscal year 26. And then I did want to note that the regular personal property bills are generated in quarter two. So you're going to see all of the assessment changes when we do that regular billing in quarter two. There was an increase in meals tax for fiscal year 26 quarter one, so that was exciting to see. And then we had different variations on the expenses. Mostly inflation. We're seeing that hit. All right, and then it's the reverse story, I'm glad to say, on the electric fund. So while the general fund is experiencing high expenses and low revenue, we're seeing the opposite. The electric fund is actually experiencing higher revenue right now and lower expenses. And then you can see in our enterprise funds, it's a majority electric fund. We have the solid waste fund and the capital fund, but the electric fund operating is our primary activity in our enterprise fund. And then we wanted to review the quarter one revenue categories. So sale of electricity is that base rate, and you can see that it is almost even year over year. And then if we look at our power cost adjustment, that was the primary change from quarter one last year to quarter one this year. It was a big increase on that. I did want to note that this was all before the rate change that went into effect October 1st. So we're going to see big changes on the next financial statement because what we've done is we've broken out the purchase power cost expense, and it should match the purchase power cost adjustment. So our revenue that we receive in should match our expenses that go out, and base rate is going to drop substantially. And then as we look at our expenses, it's very obvious when you look at this graph, our primary expense is purchase power. We do have different operating costs. Supervision and engineering includes more than just the electric staff. It also includes a portion of Bart's allocation, a portion of me and my staff, IT. So that includes allocation of different personnel. It also has power generation, and then you can see transmission and distribution. We have right-of-way crew expenses, and then transfers primarily to the general fund and the capital fund. But the largest cost is by far purchase power. And this is not necessarily financial related, but I thought it was interesting and something to note. Our customer counts for the electric utility quarter one of last year to quarter one of this year are up pretty good. We've actually broken that 7,000 customer mark. So we're currently at 7,032 customer accounts.
Are they, are any of the apartments over here already split out as customers?
Yep. So that's a big portion of that right there. And then commentary here on some of the trends that I'm seeing. So I know we have a capital fund and an operating fund, but if you take those two cash accounts and you combine them together, what is the total change in cash for the electric fund? So the combined difference is around 167,000 down for fiscal year 26 compared to last year, fiscal year 25, quarter one. Base revenue is steady, PCA is substantially up, but then as I mentioned, it's gonna change a lot when we're looking at the next quarter financial statements because of how we did that rate increase. And then we also anticipate more purchase power increases for quarter two going forward. And you can see the increase in that cost. And that's the end of this presentation. Any questions on any of the trends or graphs? And it's partly good news and partly not so good news because revenue's up, but expenses are up too.
Well, that's to be expected. I think we're good. Any questions,
Questions, comments,
comments, or
prayers?
Always.
just keep our fingers crossed? That's all we can do.
Time and attendance, you want me to go ahead and jump into that?
Yeah,
real
let's
quick?
talk about that.
One of the items that I promised my staff I would bring up to the council is that we have a delay in our utility billing project. So we originally were supposed to start that this summer, and we've been told by our software company that it's delayed until next summer earliest. So we've talked to the software company about other implementations that we maybe could do during our downtime. One of them is that the town currently has paper time sheets and time clocks that are printed off and then they're manually keyed in. So the software company does have time clocks that interface into the system, and they would eliminate the need for paper time sheets. It allows clock in from a computer, from your mobile device. It also allows it from a physical clock if you want to locate one there. Couple issues associated with it though. So there is a recurring software cost associated with it. They have agreed to cover that cost for the first year since our utility billing project is delayed. The one thing they cannot cover though is upfront costs. So they have project implementation and basically material costs for those time clocks that would be associated. And it was around $25,000 for a one-time cost. So I've talked to Bart about it, and we do feel like it's a really important project, but we need to figure out if that's something that could move forward or not.
So every department wouldn't need a time clock though, right?
Nope. You could have it on a
Like fire
computer.
wouldn't need it, the police wouldn't get it.
Yeah.
Yeah. For the police department, I think I've talked to Chief very briefly about it, but he would have an option where if he wanted officers to clock in, like they could have a mobile device and clock in
Yeah,
and
they
they started
could.
driving, or,
Or on their computer, yeah.
yeah, on their
Okay.
computer.
They just have to, 'cause that way they could document which fund they were taking money out of.
Yes. Yeah, and I think if I set it up correctly, it will have all of the codes like in time entry now. So when they actually clock in and clock out, they could say, I'm working on deer overtime, or I'm working on DMV overtime, and they get to select it. And then a supervisor has to approve
Yeah.
it. And when that supervisor clicks approve, it goes directly into payroll. So it would eliminate a lot of time entry and the possibility of errors right now for the manual entry that's happening.
That sounds a lot like what I experienced with the sheriff's office.
Is that good or bad?
Well, I mean, it's just one more step that the employee had to make, but I mean, once you got accustomed to it, it was easy,
Well,
And
yeah.
of course, it did make it easy for, know which account to pull that money from.
Yeah.
So, yeah.
I could see it saving time at the police department because you have so many layers of approvals with the paper.
Mhm. Definitely.
It's definitely an improvement.
The other thing that's associated with this is not just a time clock, it's also an employee self-service portal. So right now, we don't have anything for our employees. This would allow them to basically have a login, download W-2s. They could look at their vacation time, their sick leave balances. It would also allow them to pull pay stubs off of the account, and even if they want to change their W-4 and they want to see what the taxes would do to their net pay. It has a module in there where they log in and they say, I want to change it to this, and it tells them this is what your net pay would be. So we think that that alone would be a great benefit for our employees that they don't have today. But just throw that out there, that that's on the table as well, as an employee self-service module.
Sounds good.
Do we just need to give consensus, Mayor, or?
Or is it, I think that's,
Yeah, well, we would like your, if you've got concerns about it, we need to know that,
Oh.
but if it's okay to proceed, we'd also like to know that too.
But Bart would need to sign the quote before December 31st. And then we do have funds that have been freed up from the county covering the 75% of the fire apparatus in our capital fund. So I would recommend that we would allocate a portion of those funds that have been freed up. But we also have a substantial amount of funding now freed up, so I've discussed with Bart that that may be a topic of allocating that to other projects as well.
Wouldn't require a formal budget amendment, but I would like your, and make sure you're aware of it, because we're in a tight budget year and everything
we're always.
merits
like budget
scrutiny,
here.
but
Well, yeah, y'all okay with it? Yeah, I think it's very good.
Like a plan.
Yeah,
Yeah,
it's right next step, yes.
it's an advancement,
It would be,
yes. I mean, it's kind of like what Darrell said, that's all I really knew where I came from, so employees were responsible for their time. To a degree, but then the supervisor or department head had to prove it.
I do think it would bring us into the current age.
Yeah.
I didn't want to say that, but yes. Thank you. Yes, away from the last century.
well, particularly it gives us a truer presentation of our cost.
Very, yes, yes. And probably more accurate as to what all the time is allotted to.
Yes.
Yeah. Right.
And I'll just add that my experience with what the system that the sheriff's office used, with the, I know there was at least 2 layers of oversight there. If I or one of the deputies forgot to key in a certain thing, there was somebody that said, "Hey, what did you work? Did you work, this detail or that detail?" And he was able to get it out before severe deadline type thing. But it seemed like a real good system.
Good. It's good to hear.
All right, so you are good to go.
Good.
Thank you.
Is there any questions as you were reviewing the detailed financial report, anything that you wanted information or clarification?
Do you have any questions?
You're always welcome to reach out if you think of something later. We'll have to look at it.
Only question I had, I can't remember, the ARCA money that we have for with COVID and all that, did we have any more of that in the, Daniel, did we transfer all that to the general fund? I thought we had a restricted.
Seems like there might have been a little residual stuff, but most of it was to water and sewer projects.
Yeah, it looks like as of,
I thought we might have a little bit more in restricted, because I thought that was a restricted account.
yeah, it looks like there's only $151,000 remaining in that account, and it's allocated to Second Regional Water.
Okay, so it's all,
Okay.
We did
Encumbered.
reimburse, so there was around, I guess this would have been fiscal year '24, there was around 2.3 million that was unallocated. And so the town did claim general expenditures for that. However, when the landfill was closed back in 2023, it was all charged to the solid waste fund, and there was a massive liability out there that it said due to the general fund for around 2.3 million. And in order to write that off, we had to take a hit on that in our cash balance in the general fund. So what we did is we were able to write it off the same year that we reimbursed ourselves for general fund expenses for government purposes. But there was no way the solid waste fund, in my opinion, would ever been able to pay back the general fund, the $2.3 million closure cost.
Okay, thank you.
All right. Questions? Comments? What else?
30 minutes, anybody? For finance questions?
As long as we have money, that's all that matters. And covering our debt.
Covering our debt.
Yeah.
Well, that's a good presentation, Ann, thank you.
You're
Very
welcome.
good. Yeah, those graphs kind of go a long way. Yes.
That's something that I always tend to do, is I pull up last year's report and this year's report, and I skim down them, and I realized I should probably just put that in a graph for you, so you can do the same
Yeah.
thing with me.
Right. Good deal. All right. Are we good? Well, then I guess this is closed. Now we got 25 minutes to twirl our thumbs.
Yeah.